Hey guys, and welcome back to the Accumulation Zone. Today we will be talking specifically about the difference between future funding firms and CFD prop firms. And since I have traded with future funding firms and received payouts from them, and I also used to trade with my Forex funds, unfortunately they shut down and that account is gone basically now. But yeah, after having traded with futures and with CFDs, I think it's time to draw a conclusion for what's the better choice really if you are trading ICT concepts. So one of the biggest reasons why I trade with future funding firms for me right now is that I can execute on TradingView right here. I do all my analysis here and I simply place my short position tool, like say I want to go short of this 1 hour inversion fair value gap to target all the sell side below. I place my stop above this high, or maybe this high right here, target the sell side for a 1.25 risk to reward trade, and I simply click here on create limit order. Being logged into my TraderWeight account with Take Profit Trader or Apex, I have a very easy time to trade. I do not have to open MT5 or another platform. So yeah, that's really ideal for me. I do all my charting work on TradingView, and with future funding firms now being able to execute on TradingView itself, it's really cool, and that's one of the biggest upsides for me personally for the future funding accounts. But in reality, if you do not mind, for example, executing on a different platform or maybe even on your phone using MT4 or MT5, it's really not that much of a difference because you still do your analysis here. The only difference is that you don't manage your position right where you do your analysis. You manage it maybe, for example, on your second screen or from your phone, having entered into a potential 2022 mentorship model. And yeah, with the future funding firms, you have the luxury of managing that entire position right here where you do all your analysis. And with CFD prop firms, you execute on MT5, CTrader, or the new platform that's our Trade Locker. The second major difference for me is spread and slippage. So with futures funding firms, where you can execute right here on ES1, a centralized regulated chart, it's really simple because I could place a limit order right here at 4267, something like this with my stop loss below this low and my target all the way up here. With future funding firms, in general, it's enough if price hits the level. You don't need to go below it because of spread. Most of the traders should be aware of what I mean with spread. So 90% of the time, if I set my limit order at 4267 at a specific price level and it just ticks to this level, I get filled. Honestly, like 90% of the time. The level of precision here is unmatched, and also regarding your take profit target. Usually with a CFD funding firm, you have to wait for price to really go above your take profit target, so your take profit actually gets filled with the spread. And yeah, you only know what I'm really talking about if you have experienced it. If you only traded futures so far in your trading journey, you have no clue what I'm talking about, then I'd say it's best for you to download MT5, get a FTMO demo account, and experience it for yourself. So now that we have talked about spread and slippage, which is really a major difference between futures and CFD funded accounts, and we also talked about the different execution platforms, I think the next most important thing we have to talk about is the future challenge compared to the CFD challenge itself. So if we, let's say, compare a 100k account with a capital of 100,000 US dollars, your profit goal right here for a futures funded account is $6,000. So you have to make a profit target of 6% and you have a trailing threshold of 3,000 US dollars. You don't have a daily drawdown, but you have a intraday calculated trailing threshold. So if you're up $3,000 and you lose the same $3,000 on the same day, your 100k account is simply gone. And that's the main difference, because if we know, let's say for example, compared to the biggest prop firm in the CFD industry, FTMO, and we compare a 100k account. First of all, the main difference is that here you have a two-step challenge. You have a maximum daily loss of 5,000 US dollars, so a 5% drawdown per day, and a 10% overall drawdown, and a 10% profit target. That's really interesting if we compare it back with the Apex funded account. You have a 6% profit target and a 3% max drawdown. So you can already see how much easier in reality a CFD challenge in itself is. You have 7% more drawdown available, and you only have to make a 2% more. And really, you shouldn't be too worried about the profit goal, because simply said, passing a FTMO challenge with a maximum loss of 10% is much easier than passing a Apex funded account where your profit goal is 6%, but you can only afford to lose 3% overall. And the issue here is that the 3% overall loss is moving up with you. So let's say you're at 103k and you're halfway there to your profit goal, and you happen to lose these $3,000, your account is gone, because your trailing threshold of 3k is moving up with your account balance. Once you're funded and you have that 100k funded account and you have made $103,000, your trailing threshold actually locks in. So everything above $103,000, your trailing threshold stops moving up with you. But easier said than done, you first have to get to this stage. And then comparing it back to the FTMO challenge, once you're funded, your maximum loss, let's say on that 100k account, is locked in at 90k. It's not moving up with your account balance, and you also do not have to worry about a trailing threshold once it's payout time. So with Apex, let's say you have a 100k account, you're funded, and you're up $2,000, and you want to cash that money out. The issue here is that if you cash that money out, you lose parts of your trailing drawdown. Then you only have $1,000 left of trailing drawdown if you continue to trade. And I really hope I made the difference clear here. So with FTMO, you have a maximum loss, a account stop loss. The equity of the trading account must not at any moment during the account duration decline below 90% of the initial account balance. It's not moving up. So if you made profit, 5%, it's not moving up with your increasing account size. It's locked in at 90k. Comparing that to Apex Trader Funding or Take Profit Trader or basically any other futures funding firm, it's trailing with you. So at whatever account balance you're at, you could be 1% away from hitting your profit target. If you happen to lose more than 3% overall on that account, it's gone. Of course, there are also static accounts where your drawdown is locked in, but, well, for a 100k account, being only able to risk or to lose a total of 0.625% to make 2%, I think the main difference here is, for me personally, it's much easier to pass a FTMO account or a CFD prop account. If you use a, let's say, 5-minute ICT strategy where you look for the 2022 mentorship model and you enter on the fair value gap, you set your stop loss, blah, 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 you just have more room to lose. Because here you can lose 10% instead of 3%, which is trailing with you. Of course, you have a smaller profit target, and you only have a one-step verification here with Apex Trader Funding or Take Profit Trader. But yet, the more room you have to breathe, the easier the challenge in the end of the day is, at least for me. And before I end this video, it's really all about you, what you prefer, what you think is the best for you if you love executing, or if you like to be able to execute on TradingView on maybe a 30-second time frame or 1-minute time frame, then I'd say future challenges are definitely for you. But if it's all about what's easier to pass, then I'd say it has to be the CFD challenge. No questions asked. Imagine you're 1% away from your take profit or Topstep or Apex Trader funding take profit target. At this point in time, you're 1% away. You're only able to lose 3%. So you always have that in the back of your mind. If you lose more than 3% after being up 5%, your account is gone. Comparing that to the ease of mind that you have with a CFD firm, you're 1% away from your 10% target, but theoretically at that point in time, you're able to lose 19% of your account. So it's much harder to fail once you get so close to your profit target, comparing it to the futures funding account where you are only able to lose 3%. 19% compared to 3% at all times. That's the main difference why I think if you are a beginner ICT trader or even a intermediate level ICT trader and you struggle passing Apex Trader funding challenges because of that trailing threshold, I think you have a much easier time trading with FTMO or any other CFD prop firm. Of course, you have to be careful because some of them have more spread and blah blah blah. They may be trick traders and all that, but I will do a CFD prop firm review very soon. Until then, guys, make sure to check out my other YouTube videos, the ICT Simplified or ICT for Beginner video series, where I break down the 2022 mentorship model, the silver bullet model, the 3 drives pattern. I also talked about order blocks, mitigation blocks, and breaker blocks. Or if you want to learn more about future funding firms, all that can be found on my channel. You can also join us on Discord and join our community of like-minded traders. Until then, I will see you on Monday and Tuesday's live stream right here on YouTube. Stay tuned for that. Take care and enjoy your weekend.